Five-year Treasury note futures find themselves today in a very narrow yet volatile trading range, just back and forth, but quite contained, all things considered. Started the morning recovering overnight losses as we saw government yields around the globe go lower, starting with in Japan, a JGB yields hit a 1-month low, UK gilt 2.5-week low. German 10-year Bund was at a 2-week low, and even here in the U.S., we saw at one point U.S. 10-year Treasuries hit a 2-week low at 1.55. That combined with the fact that we continue to see weakness in the dollar, not as much against the G10, but against China's RMB. We saw today hit a 3-year low against the RMB this morning. News flow, market action kind of offset one another. Break even inflation expectations just above Monday's 2-week low. We had Fed speak from Quarles speaking twice, really said nothing worse than feared along the narrative. But the big news was a $61 billion 5-year note auction in the afternoon, which actually came out really strong with a stop through about 0.4 of a basis point. No outright concession on below average volume. But since then, we saw 5-year notes give up a little bit of their gains going into the late session. Looking at options volume through the CME CVOL, 1-week basis, 3-month basis, volatility is still at the low end of the scale. When you look at the call wing and the put wing, upwing, down variance, they're down today a little bit, but both equally, so that would imply that skew is flat. At the money vols also flat. Biggest volume notice today would be in the 124 strike, also the 124.25 strike.